Good afternoon. Happy Friday. This is Sean LaBelle of the Dekker Hewett Group. North American markets managed to string together 2 consecutive weeks of gains here. So much so that we're now 3% higher in the month of March for the S&P 500. This week's Market Watch Weekly opens up with an interesting table that we did share with you guys back on February 18th, I believe. It just illustrated the historical market reaction to prior geopolitical crises. Obviously, in this case, we're highlighting the Ukrainian-Russian conflict. Well, according to history, you generally did see a 4% maximum drawdown on the market, which was then followed by a general path of recovery that, for the most part, took anywhere between 1 to 2 months. Well, we're a little over a month now from that Russia-Ukraine invasion, and the market has more than recouped all of its losses following the immediate invasion. And this is why we kind of urge investors to always look to historical precedents and data when it comes to investing around or trading around these sort of non-market related events. Again, as we told you back about a month ago, for the most part, the market is able to get past them relatively quickly. Looking further towards this week's Market Watch Weekly, just a continued discussion around the economy and the Fed tightening cycle. Of course, this is going to be front of mind for investors for probably the next 12 months or so. As we continue to tell you, the data suggests that we should remain optimistic. The market does continue to react well 12 months following that first rate hike, which we did get 2 weeks ago. So there's a really good chart in there that just illustrates the historical performance of the market. It is generally higher. It's also a very good labor market right now. The unemployment rate is near an all-time low. Job openings are the highest rate and that we've seen in over 20 years. So basically, if you want a job, you're getting a job right now in the United States. This is not a recessionary or contractionary environment. Rather, the U.S. economy is expected to grow at around 2.8% this year. That is well above the range that we've seen in the last 2 decades of around 2%. So again, this is not a recessionary environment. The U.S. economy is still doing quite well and is still growing. We will end it there. I hope you guys have a good weekend, and we will talk to you next week. Cheers.